The US is allowing imports from Supermax Corp after customs authorities lifted a ban that has been imposed on the glove maker since October 2021 for alleged forced labor. In a statement on Tuesday, the US Customs and Border Protection said effective immediately, the agency will allow imports of disposable gloves manufactured by Supermax and its wholly owned subsidiaries to enter the US, provided they are otherwise in compliance with US laws. CBP senior official performing the duties of the Commissioner, Troy A. Miller, said the action underscores the ongoing impact of CBP's enforcement efforts in driving remediation and eliminating forced labor from supply chains. CBP began enforcing the WRO against Supermax and its units based on evidence reasonable indicating the presence of 10 out of the 11 International Labour Organization indicators of forced labor. In response to the WRO, the company demonstrated to the CBP that it has taken steps to remediate the forced labor indicators identified in its supply chain. CBP said forced labor enforcement efforts have resulted in the improvement of living and working conditions for tens of thousands of workers, including repayment of more than $50 million in withheld wages and recruitment fees used to trap workers in debt bondage. Two major US electrical and electronic firms are set to expand their operations to Malaysia, one of which is expected to invest at least 500 million ringgit. At the same time, Elton Industry Limited, a global supplier of consumer and commercial tools, appliances and floor care, will be investing a minimum of 500 million to set up its manufacturing and R&D base in Johor, said Investment, Trade and Industry Minister Tunku Datuk Sri Zafrul Abdul Aziz. Panama reports that the plan for the new facility, scheduled for completion in 2024, was disclosed during a meeting here between the minister and Elton Group President and CEO David Liu. Zafrul also disclosed that another company, which he said he was not able to name for the moment, will be investing a significant sum in Penang. He said Elton Group's decision reflects the group's confidence in the country's attractiveness as an investment destination and also aligns perfectly with Malaysia's recently launched new Industrial Master Plan 2030. During the meeting with Zafrul, the group also laid out its plan to invest over 2 billion ringgit over the next 7 years for its expansion and growth. Meanwhile, another US firm, Topline Furniture Corp, has expressed its intention to increase its imports from Malaysia over the next few years to 230 million per year. The company has been sourcing home furniture from Malaysia since 2000, with total imports amounting to approximately 840 million ringgit to date. Zafrul said the large furniture importer and wholesale distributor based in Chicago, Illinois, has a significant network of distribution centers throughout North America and supplies to 5 of the largest furniture companies in the Midwest. EcoWorld International posted a lower net loss of 12.3 million for its third quarter against 56.7 million a year earlier amid foreign exchange gains from repayment of shareholders' advances from EcoWorld Ballymore and bank balances conversion from British pound to ringgit. Its lower net loss was also due to lower finance costs from the full settlement of all borrowings, lower share of losses in EcoWorld London, and higher interest income from unit trusts and fixed deposits following the shareholders' advance repayment from EcoWorld Ballymore and EcoWorld London. Quarterly revenue, however, fell 9.65% year-on-year to 31.17 million due to discounts given to accelerate sale of remaining units sold in the current quarter, in line with its monetization strategy. President and CEO Datuk Teo Leong Seng in a statement said that EWI achieved 1.003 billion in sales plus reserves of 157 million in 10 months of FY 2023, adding up to a total of 1.161 billion, which he says places the group largely on track to achieve the sales target of 1.4 billion for FY 2023. He adds that EWI will continue to focus on monetizing its stocks with the aim of distributing more excess cash back. Teo says that new launches will continue to be put on hold until market conditions improve and cost pressures stabilize. This means that immediate working capital requirements for the group will be lower than originally estimated. The group expects total dividends payable from its excess cash, including the 792 million payable in September, to exceed the original estimate of 900 million ringgit. Teo adds that management is working towards declaring a second tranche dividend of 144 million from its excess cash in December 2023, with potentially more in FY 2024. Cypark Resources co-founder and group CEO Datuk Daud Ahmad has ceased to be the substantial shareholder of the group after he disposed of 6 million shares worth 5.4 million on Tuesday, a Bursa Malaysia filing showed on Wednesday. Following the disposal, Daud now has a 4.88% stake or 38.34 million shares in the renewable energy and solid waste management company. This comes less than a week after the group announced the emergence of a new substantial shareholder, Chung Dao, after he acquired 40 million Cypark shares on September 14th. Notably, the acquisition happened the same day Chung Chi-yang ceased to be a substantial shareholder following the disposal of 40 million shares, leaving him with 37.43 million shares or a 4.77% stake. According to previous filings, Chi-yang once transferred 2.77 million shares to Chung Dao in June. For the record, Cypark's largest shareholder is Jackal Capital, part of the Jackal Group, with a 22.51% stake. Cypark recorded its maiden loss for the fourth quarter ended April 30th, 2023 due to impairments and provisioning of 376 million, including for the waste-to-energy project that was completed this year. It was revealed in the High Court today that 681 million US dollars or 2.08 billion was deposited into ex-PM Datuk Sri Najib Razak's Ambank personal accounts in early 2013. During the 1MDB Tanore trial, the prosecution's 47th witness on the stand, Bank Negara analyst Adam Arif Muhammad Roslan, testified on the trail of money which led to the huge deposit into Najib's accounts. Referring to a 76-page money trail report he had prepared, Adam walked prosecutors through the third phase, namely the Tanore phase of the 1MDB scandal, where there was an issuance of a 3 billion US dollar bond by 1MDB via its wholly owned subsidiary 1MDB Global Investment in 2013, where Goldman Sachs was the arranger. Adam said money belonging to the 1MDB unit had flowed through companies owned by fugitive Low-Tech Joe's associate Eric Tan Kim Lung before reaching Najib's account. Over the last 2 days, Adam had laid out the money trail for the first and second phase of the 1MDB scheme, saying that the 60 million and 90 million which was sent to Najib's Ambank account in 2011 and 2012 respectively could all be traced back to funds belonging to 1MDB and its subsidiary. Today, he meticulously laid out the money trail for the third phase of the 1MDB scheme, where the 681 million US dollars in 2013 entered the same private bank account for Najib in a series of fast-paced, multi-layered chain of transactions. The trial resumes tomorrow, with Adam expected to continue testifying on the money trail for the fourth phase.